Have your recession risk estimates changed at all, given all of the disappointing eco data that we got out of the U.S. this week?
Not this week, but certainly we raised the estimate for about 20-25% just a few months ago. As you point out, the indicators are quite gloomy, so they point to what we estimate 1 in 3 chance in the next 12 months of a U.S. recession starting.
The problem, though, Terry, seems to be that corporations are not really preparing for that potential economic slowdown. We continue to see them binge on debt. How risky is this?
Indeed, you're pretty right. We were a bit surprised with the earnings growth slowing that corporations continue to take advantage of what's been called now the lower for longer interest rate environment. Putting on debt, that's one way, I guess, to spruce up returns. But that said, of course, if you're going to slow down, what are you going to do with the debt? As the program touched on earlier, there are fears that consumers are turning conservative, retail sales are down. There's a real threat that you may have over-levered going down into a slowdown.
How great, in your view, is the risk posed by that growing debt pile? Because I know that, as you point out, low rates have kept defaults down, but is that going to persist forever?
There's usually a time lag. My colleagues have done a study when low-grade debt or speculative-grade debt tends to build up before a downturn. There's usually a lag of anything from 2 to 4 years before we see a spike. So that's a lag effect of credit quality. So credit quality deteriorates first. There's some time before we actually see default spike. So the risk is being built up, but it won't manifest itself for a little while yet.
In the course of your study, have you identified any particular sectors or countries that are at greater risk?
Well, certainly the obvious we see in auto, to a certain extent capital goods, and of course retail, which we've been all talking about for a while. The country that's been quite latent is obviously China. That's a chronic situation. It's been building up for some time, for the past 10 years. The Chinese government is trying to manage it. Hopefully there are no policy mistakes that could trigger. But that said, the Chinese government still has a lot of levers, given that China has a high savings rate.
So what are financial conditions looking like right now, given that we continue to see the central bank actions around the world?
Conditions generally are bumpy. I think is not surprising on the positive. As you mentioned, governments and regulators have taken action on interest rates and money supply. The negative is obviously that if you're doing this, then something is wrong, and the economies are slowing. Businesses turning conservative in terms of investments. We've seen manufacturing and trade come under pressure. So that is a net, I would say it's a net slight negative, and it's more gloomy.